This conference will now be recorded.
So we are now on steps 5 and 6, making adjusting entries. Adjusting entries are different because we don't know exactly the amount that we have to debit. We've got to calculate the amounts. And all the other journal entries, you don't have to do that. But a company might have 10,000 regular journal entries. It's only going to have 200 or so adjusting entries at the end of the year. So these other journal entries are still very important. And then we have to get these financial statements prepared. Now, as we work on your problems that you've been sent, I expect the income statement to look like this, all the way through net income after taxes. So you've got a tax rate in those problems. So your income statement should be looking like this, just throwing some numbers down. The statement of retained earnings is the same. You might have a beginning balance in retained earnings. And then you're going to get me 2 years of balance sheets. 2 years of balance sheets. The first balance sheet for year 1, you're supposed to have sent that to me as your homework. So the first 40 journal entries, that balance sheet, that's year 1. And that should already be completed. And it'll be year 1. You will pick up your additional 20 or so transactions and come up with year 2 numbers and the balance sheet for year 2. These numbers also from year 1 become the beginning balances in the T accounts. So whatever is in year 1 will be a beginning balance in your T accounts. Are there any questions? Okay, we'll get to work. If you have any questions, just check with Joy. She'll be able to easily help you run through it.
Wait, what are we supposed to be doing?
Did you get an email, Huntsberry?
Yeah.
From me yesterday?
Yeah.
With a problem to work?
Mm-hmm.
Okay, work it.
Oh, okay.
So that's what I want you to do, work that problem. You don't have to come to class on Thursday if you got that problem already. You just got to work the problem.
Wait, no, I heard that part. So work the problem now, like during class?
Now you'll learn a little bit more about what you're going to have to work on in it today. But on Thursday, you don't have to come to class. Thursday.
Okay. Oh, yeah, I heard that.
Then you'll turn it in a week from today because I want it done correct. Make sure you work on the version I sent you.
I am.
For the people who have to take the midterm, we have to come to class, correct?
Unless you're going to figure out another way to take it. But I would suggest you come to class with your camera on so that I can give you the midterm. And
Okay.
you're not just come take the midterm, you're going to pass it. Got it?
Okay.
Okay. So let's talk about adjusting entries a little bit and look at these important rules. Cash not involved in the adjusting entry. You don't have cash. You might have it in a preceding entry or a succeeding entry, but you won't have cash. Adjusting entries involve an income statement account, and a balance sheet account. Okay? So when you make an adjusting entry, you got one account is income statement, the other account is balance sheet. And we're making these entries because, you know, things have occurred and the asset and balance sheet accounts are not right, and the revenue and expense accounts are not right. And so we're just making those adjustments. So those were some examples for you. And I'm trying to get to my your summary of adjusting entries. So you should always have this handy. There are 4 adjusting entries: prepaid expenses, unearned revenue, accrued revenue, and accrued expenses. Let's talk about prepaid expenses at first. The assets are overstated, the expenses are understated. And so you got to make an entry debiting an expense account and crediting an asset account. And there was a preceding entry. So what do we mean by an balance sheet account versus an income statement account? Well, I just put your chart of accounts in here, right behind this. And what you've got to have is an account from both sides when you make an adjusting entry. You got to have an account from both sides when you make an adjusting entry. Let's see if I can. Okay. Everyone see that now. Balance sheet one side, income statement on the other side. You got to be using an account from both of those. Let's talk about prepaid expenses. The accounts, the asset accounts that we're going to be dealing with, and you in the preceding entry you debit them, and in the adjusting entry you credit them. These accounts are right here. From supplies to here. So I'm gonna bold them for you, bold them back. So if you got a Roman numeral 1, AGA number 1, it's going to involve the accounts, supplies through accumulated depreciation. On one side. Can't hear you.
Can you hear me?
Not well. But we'll come back to you. Just get that clear. We'll come back to you. Okay. So on the other side, when we have a Roman numeral 1 adjusting entry, depreciation expense might be the account involved. Insurance expense may be the account involved. Supplies expense may be the account involved. So now I've showed you what accounts are involved when you have a prepaid expense. Okay, when you have a prepaid expense, it's going to involve on the asset side, supplies through accumulated depreciation, and then on the revenue side, depreciation, insurance, and supplies. Any questions? So since I expect everyone to be able to do supplies, let's see if we can do an example for supplies then. And try to utilize your new knowledge. Let's assume we have supplies purchased in 2017 of $15,000. And at the end of the year, supplies total $5,000. That's the information. So what type of adjusted entry is this? Roman numeral what? 1, a prepaid expense. So we have Roman numeral 1, a prepaid expense. And since we have a prepaid expense, we know that it's going to involve these accounts and these accounts. So specifically, since it's supplies, it's going to involve the supplies account and supplies expense. Okay. So let's just see. Let me do me some. Okay, so we got them all cleared out now. So let's go back to adjusting entry 3 where it says there's 15,000 in the account that was purchased. So what's our journal entry going to be? We need a preceding entry in 2017, and we're going to debit supplies for what?
15,000.
15,000. And credit what?
Cash for
15,000.
15,000.
So that's the preceding entry. So suppose we just I won't erase it. I'll just see if I can stick the T accounts in here. Undo. It's not going to let me break that table, so I'll just put them in here, I guess. Okay, so we got some T accounts in here. Let me move them down. And I'll switch this to supplies. And we're do my accounts like I wanted them. Let me just go in here with the horizontal is, since this is set up like I wanted to sell supplies. With 2017, and so the amount that we had in supplies is what, 15,000?
Yes.
And they tell us how much it's going to be in supplies at the end of the period. How much is supplies at the end of the period? 5,000, right? So we know supplies needs to be 5,000. So when we make the adjusting entry, how much is that adjusting entry going to be for? How much is that?
10,000.
10,000.
10,000.
So we're going to debit supplies expense for 10,000 and credit supplies for 10,000. Any questions? Then when we go back and do our posting to our T accounts, got 10,000 here. And now we need to go to I'll come in here then. We need a supplies expense for 2017. And so the amount of the supplies expense is going to be how much?
$5,000.
10,000.
Uh-oh, that was a bad guess. Y'all just told me 10,000.
Yeah, 10,000.
10,000.
Okay, left in the account is 5,000. So the expense is going to be 10,000. Okay. And now we're going to close this account out at the end of the year, at the end of the period. Okay. Let's go on to 2018. So in 2018, they tell us that what? We bought 5,000 in cash, and we purchased an additional 10,000 on account, and 4,000 is on hand. So what are we going to do now? So we're in 2018. So we buy 5,000 for cash, right, in supplies, correct?
Yeah.
And we buy 10,000 on account. Is that correct? Is that correct?
Yes.
Okay, so we go to the T account now for supplies. We bring into 2018 the balance, just like whatever is in your bank account on December 31st, 2020 will be there in 2021. Then we had another purchase of what? 5,000. Then we had a purchase of what? 10,000. So when we add these up, we had available $20,000 in supplies. Okay. But the balance now is how much? 4,000. So what does the AJE need to be for 2018?
$16,000.
How much? Down the right.
16,000.
16,000. So the AJE we debit supplies expense 16,000, and we credit supplies 16,000. So in the adjusting entry, we use the supplies and supplies expense account. As we said, we use one income statement account and one balance sheet account. And we debit the expense because the expense is understated, and we credit supplies. Can we handle a supplies adjusting entry? Okay. Since you can handle it, be good to have a little quiz now. So, ready for a quiz?
No.
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 Why? Why y'all not ready for?
What time is office hours tomorrow, and which code do we use?
Y'all's code at 1:30. Since y'all not ready, let's just try 9. So look at 9, see if you can work it, and then put your answer in the chat. Put your answer in the chat. Yeah, a long time to put something in the chat. Got a chat answer. So y'all don't know how to use the chat. Is that it? Tell them how to use the chat, Joy.
You're not giving us time to think.
Oh, you need time to think. I'm glad it's a multiple choice.
Which one are they doing, 9 or 10?
9.
No.
I still don't see one thing in the chat.
Am I allowed to answer this too?
Sure. Just make sure you get it right.
I still remember how to do this.
Say what?
I still remember how to do this.
Okay, good.
Or at least this one. Don't ask me about number 10. But I could be wrong.
Y'all are some thinking people. Let's be Latanya Williams.
I'm picking up my kids from school and trying to watch the class at the same time.
Well, kind of mute yourself, but it's good you're picking them up, though. That's a good thing.
Yeah, because today was their first day back in person. So.
Well, why hadn't you answered yet? What you got to do is do like I told someone else. She got to get her a car that will drive itself so she can.
Yeah, that sounds like a plan.
Okay. So they had 5 on hand, and they made purchases of 8 and 7. So let's see if we can go back to where we were. So as it was in this problem, they had 5 on hand, but their purchases were $8,000. And 7,000. So how much do they have available now?
So it added up to 20,000. Then it after you had the balance of 2,000, you subtract that, so it gave us 1,800.
Add these together, how much is this? 20,000 again?
20,000. Mhm.
And how much did you have as
And
your
then
balance?
and the balance was 2,000. 2,000.
Okay. So the adjusting entry had to be what?
1,800.
Not 1,800, but
Well, yeah, 18. Well, yeah, you know.
so
Yeah.
the adjusting entry is never the balance, it's the difference. Okay. And we have to debit the expense account and credit the balance sheet account. See what it says? We have to, in that adjusting entry, when we make it, we must debit the expense account and credit the asset of the contra account. So eventually, you know, it took a while. Most people got that one. So let's go so we can chat some more. Unearned revenue. So that's our
Professor Boy, my connection got lost. So A was right?
A was right. Why don't you have some confidence, Huntsberry?
Because I don't be knowing.
Well, get in the know. Get in the know. Okay. Unearned revenue. Unearned revenue is our second type. And with unearned revenue, you already got the cash. So you love running a business like that. So in a preceding entry, you get the cash. And then once you perform the services, the item is no longer liability, it's a revenue. So with unearned revenue, we have only 2 accounts to worry about. First of all, the unearned revenue account. What type of account is that? What type of account is it?
So your audio is breaking up. Like I didn't hear nothing that you said.
Okay, so am I bringing up to a lot of people? So that was the problem. I was breaking up this. Okay, so unearned revenue is what type of an account?
Module 2.
Say that again.
Module 2.
It's a liability.
Thank you. We just wanted you to say it's a liability. And the other account that's involved is sales. So when you have an AJE type 2, you only got 2 accounts to worry about: unearned revenue and sales. So let's look at what happens in an example. Let's see. Here we go though, GameStop. So assume GameStop in 2017 received from 1,000 customers $50. That's kind of a nice situation, isn't it? People want their game, so they give them $50,000. When that happens, a liability is created because they can't recognize revenue because they hadn't earned the money. Everybody see $50,000? So let's see if we can go up here and make a journal entry for 50,000. So we debit cash 50,000 and credit the earned income for 50,000. That's the preceding entry. Now, when we deliver the asset and we collect them, then it's time for our AJE. So we had cash in the preceding entry, but now we're just going to debit the unearned account because there's no longer liability. We deliver the goods, and now we can recognize the revenue. So how hard is that? How hard is that to do? Debit cash and credit unearned income when you get the money. Then when the gains, you deliver your gains, you can then move it from the liability account to the sales account. So liability means that, you know, if you don't produce, people have to get their money back. But once you've done it, then it's your money forever, and it becomes revenue. Any questions? Well, quiz time once again. And we'll just keep it multiple guess for right now. See if we can find one.
What was the correct answer for number 9?
It was A. Should have been A. Is not the 2000s. And then C, the entries are incorrect. So thank you for bringing that up. That is, you should have been debited supplies. Let's see if I can. I have to do a regular one. And I bet and guess. Here's one. So put it in the chat, A, B, C, or D. And I don't want all of that thinking on this one.
It's number 4 or number 5?
Number 5. Well, I will tell you all, D is not the right answer. D is not the right answer. Well, let's see.
Well, I said D wasn't because it's saying the one was unearned, but wasn't it earned?
But it was earned in advance, accounts receivable at the end of the year.
All right, let's go to the rule. Let's go to the rule, then maybe we'll come back to it. So everybody fix these answers in their mind. I get that. All right, let's see if we can get to the rule. The chart says you debit the liability and credit revenue. So what's the answer going to be?
Can you go back to the answer choice?
D is A.
Now, okay.
Can you go back to the answer choice?
I think this is it here.
I think it's lagging.
Wait, you said credit the revenue?
Oh, it's C.
Well, if that's how I say, if that's the case, it's C.
Well, so that's her.
Nobody can see.
I mean,
Look, I was really about to type C, but then he went back up, so I was like, all right, I'm gonna just let it be. I'm really slow, so I was going back and looking. I didn't even type it because I was like, I don't know.
Oh, okay, so that's why you were saying it's not D, definitely, because it's just backwards. That's why you were saying
backwards. Yeah.
I knew it was I knew it was the words. I don't get this, to be honest. I'm not gonna lie to you. This stuff is starting to be difficult for me.
Only if you make it difficult.
I think I am making it difficult.
Yeah. What happens here is that you're not told exactly what the answer is. And so you've got to think.
Well, I feel like I'd rather do this than input it the information. I'd rather do multiple choice than anything.
Y'all missed them, so it don't matter. You know, at least when you input, you might get partial credit. Oh man, it's either right or wrong or multiple choice. And the way y'all were guessing on that one,
I still feel like multiple choice because multiple choice give you because doing it by yourself with the input, that's what was my problem, was knowing which words to use, like which account names to use. Cause I don't know, I don't know why you keep doing 1 to 3, but can you look at 21s in those questions because I think 26 through 27 they like the same, but I didn't know how to do the adjustment for that one.
20 what?
I believe they're 26 through 20. Yeah, so it's 26 through 29, or no, 30 really. All of them are. You see how they all the same.
Mm-hmm.
So what we would do is just multiply each of them for the limo. But what would be the adjusting? Like, how would we do the adjusting for those? Because
There a second. Do 24 for me.
scroll down.
We're
Please.
right here, 24.
I
Just do
can't
24 first so we can stay where we are. Give me the adjusting entry for 24.
I don't know if it's my computer or what, but it's like lagging. So I don't know if I can't see 24. Okay, there you go. So it's 24, like, so you said give you the adjustment for it by itself.
Adjusting entry.
So that's what I'm saying. So, okay, that would be 50 times the customers. But that's the thing. I don't know the names. Like, how do you know the account information? 75.
There are only 2 accounts.
And it's advanced because it was credit advance for the customers.
We told you if you have a type 2, there are 2 accounts. What are the 2 accounts?
The 2 accounts are gonna be, it's gonna be a liability and revenue.
That's right. Earned income and sales. So in that adjusting entry, that's all you're dealing with.
Okay, so for that problem by itself, will we do another part to that or no?
I just told you to make the adjusting entry because you wanted to get to 26. So I just said, well, give me the adjusting entry in 24.
Well, I got 20, so 24 would be 75,000.
My audio went out. I honestly don't know what was said.
We're working 24.
So 24 would be 75,000.
HAE for 24.
So it would be 25,000 for, well, I thought it was customer advance, but I need to figure out what that would be for unearned revenue.
Okay.
So it would be unearned revenue for credited 75,000.
From the 12, from the 15?
No, so you would multiply 15 the
Well,
customer.
no, I know that's the 75,000, but only 12 can't pick it up, so that's 60,000. So do we put both and then the AJE be 15?
Where you see that 6 people picked it up?
It's right here.
1,200 customers picked it up.
Have picked up the game, so you do the 12 times the 50, and that give you the 60,000.
But only 1,200 picked it up.
I know that's what I'm saying. So do I subtract the 75 from the 60 to get the 15?
About all of that. Let's make both.
Okay, wait, I'm genuinely confused then. So like, what is are we supposed to record?
What's the entry to be made
75?
when 1,500 customers pay us $500? What's that entry going to be?
I thought that was 7,500.
That's not $500. That's $50.
No, that's 7,500.
Customers pay $50.
It's gonna be 75,
yeah, 75,000.
What we're gonna debit?
You're gonna debit your cash, and then you're gonna unreceived revenue. Earned revenue.
Okay, and we're gonna credit
unearned revenue.
me put UR in here, unearned revenue.
Okay.
But that's why, okay, so what I'm asking you, is it more, it's more to this, right?
Nope, not much.
No.
So this is the
Then no.
this is the preceding entry when you get the cash. Now at the end of the year, they say what?
But it said then make the adjustment for those customers.
Well, yeah, it asks for the end of the year. It says,
I'm only concerned with the 1,200 customers.
yes.
So
So that's
we're gonna debit unearned revenue
60,000.
for the 1,200 who have picked up their game.
So that's
Which is
60,000.
How much is that?
60,000.
60,000. And now we're able to credit what?
The 1,500.
No, 1,500 got nothing to do with
That's
that.
60,000 again, right?
What's it then make for the 1,200 games to customer? Are you talking about the sales? Oh, you saying credit the sales?
So you creating other stuff. That's all you had to do.
So that
but I thought with the adjusting, we had to do the math. Like we had to like subtract or something.
Yeah, that's what I did too for the adjustment for my problem.
If I had told you, what 300 customers didn't pick up this doing some subtracting maker, but I just made it easy. I tell you, 1,200 customers got the game.
So yeah, I did the adjusted, and then I did the 60,000 and 60,000, and I did the 15 for the leftover.
This.
Okay, so then, okay, cool.
This. When the people pay, you debit unearned revenue. Then when they game, it becomes sales and no longer unearned revenue because you no longer owe these people. See, when it's in the account, you owe the money to the people. But once you deliver, you only got to worry about 15,000. The other is your money. When all the money is over here, this is not your money. But when you can put it down here to sales, then this cash is yours. Got it?
Okay, but what I'm
saying, make the just the entry. Okay.
So with it being said, all problems are not gonna be inputted the same way. In a sense, like all of them not gonna have the same amount of information.
Yeah, that varies.
Well, because when we did if you go back to doing number 21, when we was doing number 21, we had to do something totally different, and it was like we had columns.
Yeah, because that's a different type. That's a prepaid expense. It's all together. Yeah, it's a whole different thing.
Okay, so it's 25 through like 26. Well, I think all the way through like 29 probably. Will they only be like simple how we just did 24 because they were just like basic?
Let's do it there. Let's do them. Let's do them and see how simple they'll be. So I'm just going up here and get me some.
Make sure I was doing it correct. So number 24, 25.
See, y'all trying to make it be one way. And you can't, you got to read it and determine what you got to do.
So it's going to be the 20 limos times 400.
Let me get all of these out. Okay. So in 25, it says what? In 2017, we provided 20 limousines to Chase Bank for executives at the rate of $400 per vehicle. So you may have seen this one before, kind of, corporate sales on account. So how do you handle corporate sales on account typically? You say it's type 15 and you debit what?
Is it accounts? Well, I thought it was service revenue at first. I did accounts receivable and service revenue, but it's accounts receivable.
And sales. So when we do the work, we don't have any money, but we've done the work. We have to make this this is an adjusting entry because we got to put, show that revenue. So what's 400 times 20? 8,000?
Yeah.
So this now is the AJE.
So that's all we was doing.
Where we've done the work, so we got a 15. We just debit account, receiving credit sales. So you've been doing this for a long, long, long period of time.
Mm-hmm.
So you can't go around saying you don't know how to do this. So then we have a subsequent entry where you collect the cash. What type is that?
That's an account. Well, wait a minute. You said we received the cash.
Yeah, you got the cash now. Next year in 2018, you got the cash. That might be a type 3. So what you doing in type 3? Y'all trying to make this hard.
This assessed as revenue.
What?
Assets and revenue. You said 3 for type 3.
I said type 3. You got your journal entry types handy?
Yeah, I got it open. I'm looking at the summary or for adjusted entries.
Yeah, I'm just talking about those regular ones.
Oh, for type 3.
So all 25 is a type 15 and a type 3.
Oh, okay.
It is a type 15 when you did the work. That's the adjusting entry. Then it's a type 3 when you got the cash. So those are ones that should be 2-minute ones because you've done this all semester long. Type 15 and a type 3. So you can try to make it hard. It's written a little different, but you can try to make it as hard as you want. But at the end of the day, it's a type 15 when you did the work. When you gave them the limousines, you done the work. You owed $8,000. Then when you get your $8,000, you're extra happy because you got your money now. You're very happy when you do the work and somebody gonna pay you $8,000. Now you got it. Any questions on 25, 26, 27, 28, where you have done the work and you get paid later? So all of them operate like this.
Yeah.
You got numbers.
Some are the same. They just got different numbers. Okay.
Mm-hmm. So are they kind of easy, maybe?
Yes, I mean, I was talking to one of my group members and I was telling him I just didn't have my names, like the names correctly, like what the account names, like.
So don't try to make them so hard. We're doing some of the same thing. It's just got a little thing. It's not, okay, you got one number, you got the answer. 400 is not the answer. 400 times 20 is. So you're always doing a little calculation. Okay. So now we go back up here. Hopefully you begin to get a sense of the chart. We have prepaid expenses. In the AJE, you debit the expense and credit the asset of the contra account, accumulated depreciation. When we had the earned revenue, you debit, earn, and credit revenues once you've done the work. Now we had accrued revenues, where you debit the asset and credit the revenues, type 15. So when we have adjusting entry 3, the accounts involved are going to be account receivable and sales again. So whenever you have a type 3, those are the accounts. Those are the only accounts you got. Account receivable, sales. So you can try to make that as hard as you want, but other than a little calculation of the amount, it's there.
Are we able to get the chart with the, like, to let us know which one it, like, which one we use, like which AJE we use? Like, so when you had put it on the charts, like which one is what, like which one is AJE, like 1, 2, 3, 4, like how you have it like bolded? Can we like get that? I tried to write some of them down, but like you're kind of going pretty fast, so I couldn't write them all.
I'm going what? Okay. You want this, or what do you want? Or you want
no,
this?
not that. The other one. Yeah, like which one is like what, like AJE, the adjustment entry.
All right. It's gonna cost y'all. Let's do the final. Well, let's see. Did we get the accrued revenue? Yeah, we got it in there. Now we need to do number 4, accrued expenses. And it says in the AJE, you debit an expense, you credit a liability. So you've incurred the expense, okay? It just hadn't been paid yet. You're gonna pay it later. There's gonna be a subsequent entry where you pay later. So Janet wants these for us. Let's see if we see where the AJE 4s are gonna go. Okay, it's gonna be liabilities. So we got an AJE 4 here and 1 here. Okay. So the balance sheet account is always in a liabilities, salaries payable, or any other accrued liability. So they're not salaries, we just put them here. Income taxes, whatever, interest. And then on the income statement side, we're going to have sales salary expense, office salary expense, interest expense. Okay, so now Janet was requesting you have the chart of accounts redone to show you what accounts are involved in each adjusting entry. So you know that, well, if it's 1, I got to go where the 1s are. If it's a 2, where the 2s are. 3, 3, 4, 4. And some of them are very simplistic. So You do have to work and think, but they shouldn't kill you. Okay. So let's look at the type 4, where we have accrued expenses. So our expenses are understated and our liabilities are understated. So we don't have all the expenses recorded. So let's look at a standard one. Typically, let's just assume that in the first one, we pay the workers every Friday. Okay, so we pay them every Friday, $5,000. So the workers work Monday through Friday, we pay them $5,000. So on December 6th, $5,000. December 13th, $5,000. December 20th, December 27th, $5,000. We debit the expense and we're crediting our cash. But the end of the year comes and the workers work 2 days. We still need to debit an expense, okay? So we still need to debit an expense, but we won't pay them until January 3rd. Okay, so that's the situation. So let's see if I can find some journal entries here.
What time does office hours end tomorrow?
Typically 1:30 to 3, but if they have to run over, that's fine.
And it will be our code that we used like today.
Pardon?
Would it be our code that we used today?
It's your code. It's your code because it's Wednesday.
Yes, sir.
Okay, so let me get these out. Okay, and maybe I'll take it on down some. I'll just leave it. Okay. So in 35, J.J. Roan Company pays its workers $5,000 for a 5-day work week. So every Friday they pay $5,000. So on December 27th, and this entry would be made on the 6th, the 13th, the 25th, and the 27th, they would have, what do these things do to me? What are these? They did not come in here like I wanted them to. Okay, let me see if I can find some journal entries again. Maybe I'll just try stopping here. Copy. Okay, so we got our journal entries in here now. So what we said was going to happen was that, okay, we pay the workers $5,000 a week. So when the 27th came, December 27th, made an entry debiting salary expense. And we credited cash for $5,000. So that's a standard entry that we made when we paid the workers. Then because we paid them $1,000 a day, we got 2 days left over. So we need to, for 2017, put 2017 up here. We need to pick up those 2 days and put the salary expense in those 2 days. So we're paying them $1,000 a day. So we need to debit salary expense because we've incurred 2 more days of expenses. We don't have to pay it yet. So we'll just debit salaries payable. And that way we got those salaries in 2017. Now, when 2018 rolls around, and we get ready to pay the workers on January 3rd, how much money do the workers want?
$5,000.
Yep, they want $5,000. They're gonna act up if they don't get it. Our people will act up if they don't get paid. So we've got to pay them $5,000.
Professor,
Mm-hmm.
Are you gonna upload this today, the video, or no?
Yes, I plan to.
Okay.
Okay, so in 2018, this payable that we created to get 2,000 of the expense in 2017, we're gonna debit it. So we're gonna debit salaries. And put this $2,000 in here now. And then the salary expense in 2018 for this payment is only $3,000. So we paid them $5,000. We paying them $5,000 every week. But at the end of the year, we want the expense for the amount for those 2 days. We want that an adjusting entry made so that the expense is in 2017. So even though it's paid in 2018, it was incurred in 2017. So we make this adjusting entry. So then we pay $5,000 in 2018. Only $3,000 of it is an expense for 18. The other $2,000 was expensed the prior year in 2017. So that's all that we're doing. Okay, that's all we're doing. So this is the AJE here. That's the AJE. And then we get ready to pay. So when we're paying on the 3rd, when we pay on the 10th, it's going to look just like this: salary, expense, credit, cash. And it's going to look like that every week until the last week in the year, where we determine. So unless the year ends, unless December 31st is on a Friday, you're always going to have to make an adjustment. Now, if December 31st is on a Friday, no adjustment would be needed. But if it's not on a Friday, we have to adjust. Any questions? All right, let's see if we can, how the chat's working now. See if we can find another one.
I have a question about accounting majors. Like, do they have to like possibly like have to make like all A's in their classes to become an accountant? Because like you can't mess up when it comes to stuff like this.
That's right, you can't mess up. So it's good to make all A's, A's and B's. You know, typically though, you want to concentrate and focus on accounting and make that A. This is your job. So you might have other things that you're doing, but everybody can't do this type of a job. People get paid to do this job. So you have to put the time and effort in.
Have you ever did an accounting job, or you just?
Yeah, I worked in public for a while, then I started teaching and I enjoyed it. But yeah, I worked in public accounting with a firm called Arthur Anderson. I passed CPA exam as I graduated from college because I studied and worked real hard and went on to work. But then I was able to begin teaching. And what I will tell you that in teaching, the beginning salary now for people who have a PhD in accounting is something like $150,000 for 9 months. So if you can learn how to teach this, you can have a flexible schedule, work 9 months, and do real well. The big schools, they probably $250,000 a year, $300,000. And there's some research requirements and things like that. But accounting is a good area. Any other questions? All right, answer this one for me.
Dr. Boyd, do you still need me?
Of course.
Huh?
Where you going?
Go vote.
Oh, you're gonna go vote? Well, go ahead and vote. I'll try to get their problems sent to you so you see what they're working with.
Yeah.
On when there is a return, they would need to debit sales returns, not asset, whatever.
Okay.
So it comes out about the same, but they really should have been debiting sales return, but it's not a major issue with that. Well, go vote.
For the adjusting entries?
No, remember the last entry they would have on those tests would be they had the refund money.
Mm-hmm.
So when they refund money, you debit sales return.
Then why is it on the On the transaction types, it says item returned cash.
That's what you gave them. That's what you credit.
Oh, good to know.
Remember, that's one of those. So you credit cash, but the item you would debit will be the item return, which is a sale. No big deal.
So it'll be, you said sales
Return.
Sales you would debit, and then cash you would credit.
Sales returns. You could debit sales, but probably because you want to keep track of returns, you debit sales return.
Good to know. Good to know. All right.
Okay. So what's our answer to 7? I can't tell on these chats.
I think it's B.
That's correct. Debit salary expense, and credit wages payable. Any questions? Okay. Let's try number 11. So what's the answer? Number 11?
Oh, I believe it's B. I don't know.
A.
I think it's B.
Someone else talking? Someone else say something?
Oh, I said it was A. I said it was A.
So Janet is correct. It's A.
Yeah, I believe it was A too.
Okay.
Because the 20,000
Echo
minus
it.
the 5,000, they give us 15,000, and then of course the supplies, expense, and then supply.
All it is.
Yeah, I don't know why. I was thinking when you were saying like what they own, because that mean they didn't sell that much, right? They only earned 5,000 from it.
These are supplies. Okay, you're running a business. You purchase supplies costing 20. At the end of the year, 5. So that just means that you used a lot of supplies.
Okay.
Hopefully, supplies generated revenue. So what you need to do, you've got a bunch of multiple choice questions. So it'd probably be best to go through the multiple choice first and just practice on those and then go from there. But let's not try to overthink this. These are simple. You got to think of something, but they're kind of simple problems. When we come back to class next week, so look at the schedule so that you're not looking at all of them at once. On Tuesday, when we return to class, you'll have an attendance quiz on supplies only. Okay?
Okay.
Then on next Thursday, you will have prepaid insurance and unearned revenue. And then the next week, you'll have some accrued revenue and fixed assets, long-term assets where you have depreciation. And then we'll do salaries payable after that. So over a 4-day period, we'll work them, but we only count on working 1, maybe 2 a day.
So what's going to be on the midterm Thursday? I'm one of the people that takes the midterm Thursday.
You want some adjusting entries?
I'm really just kind of I'm barely understand those, but I mean, I'm gonna join your tutoring though. So I really, honestly, at this point, I'm just trying to get it done.
You just have about 7 to 10 journal entries, and you have to take them through the whole process from journal entry to ledger, to trial balance, to financial statements and closing entries. So you got to be able to take them all the way through. Got it?
Yes, sir.
So 7, if it's just a C test, it'll probably just be 7 journal entries. If they're,
What page is these study problems on in the primer?
well, I've been adjusting this, but look like it's in the 100 page, but I've been adding stuff in. But it's right at the end. You like, where the problems that you have here, they're after that. Okay.
Oh, okay. Okay.
So it should be a simple and basic test that we'll have.
It's page 92 for anybody else that has a primer.
Okay, so I've added this one. What you're saying is page 92. Thank you. So continue to work with these, but they're not the end result. The end result of those financial statements. And then I'll just do these in, just piecemeal fashion. They're journal entries. You have to post them to the ledger, close out and everything. But there are no set numbers that are given. You got to think. That's the difference. Any other questions?
So for Thursday, the midterm will be like during this class?
During this class.
All right, bet.
You need to be in with your screens on.
Okay.
Anybody else? Well, you all have a good rest of the day. Look forward to seeing a lot of you all in the tutoring session